Stablecoins are a super useful middleware. I think I tweeted a few days ago that this time next year, I'd be shocked if there aren't hundreds of stablecoin APIs doing a very similar type of behavior to what you see in traditional payments.
That's Arnold Lee, co-founder of Sphere Labs, a company revolutionizing payment systems with its Solana-based payment platform, SpherePay. In this episode, we dive into the evolution of Sphere Labs, Arnold's unique approach to navigating compliance and KYC in payments, and the future of stablecoins as a settlement network. We also explore Sphere's unique differentiation in the competitive market and how compliance and security serve as their competitive moat moving into the future. Thanks for listening.
Season 1 of Stableminded is brought to you by Layer 1, powered by BVNK. BVNK has been at the forefront of stablecoin payments for years, and Layer 1 is their latest innovation, designed for businesses ready to harness the power of stablecoins. Layer 1 is self-custodial, global, and takes the hassle out of managing payments across multiple chains. It's the same technology BVNK uses to run their own operations that they've been developing in-house for years. Next season, we sit down with Johannes Kask, Managing Director of Layer 1, to talk more about it. So stay tuned until then.
All right, Arnold, thanks for hopping in, man. How you doing?
Dude, thanks so much for having me. I'm doing well. It's been a hectic last few weeks. Great to see you in Vegas. But yeah, excited.
Yeah, it's great. Always great to see people in the space in person. It's especially special when you do that because we're typically doing this. So it was great to see you in Vegas as well. I'm really excited for this conversation. As I was mentioning to you before we hopped in here, the goal for the show, Stableminded, is to get people who may just now be entering this space for the first time, wanting to learn more about stablecoins, a chance to sit down with secretly incredible founders who have been or are in the early phases of building their business. I'm really pumped for this chat because I know that you have a very, very compelling business at Sphere that you're building that, in my view, is doing a really good job of onboarding businesses that may be doing stuff with stablecoins for the first time. So I think that you're an amazing host or amazing guest to have here. Why don't we start? Give us your intro, name, role, a little bit about Sphere, and then we can dive into more of your background after that.
Yeah, absolutely. And, appreciate the kind words. When you first mentioned this idea to me, I was immediately sold. Couldn't think of a better host, and excited to dig into some more of the weeds that you normally don't get to if it weren't a stablecoin focused pod. But, Arnold Lee, co-founder, CEO of Sphere, we're a B2B cross-border payments company, and we use stablecoins as middleware. We oftentimes serve clients in emerging markets like LatAm and APAC. And, if you think about Swift active relationships, the normal way you send money internationally, folks don't really have access to dollars in the same way in these markets. I think that's hopefully a good TLDR about Sphere. We started about 2 years ago legally, and then about 2.5 years ago informally. And it's been amazing, especially in the last year, to see some of the market turn on, an appetite come from non-traditional, I suppose, merchants, fintechs, everything from brick and mortar, silverware companies, up to hedge funds, prop shops, fintechs. And co-founded this company with my best friend, Luigi, from college. I met him back about 10 years ago when he had a full head of hair. Hopefully, or, depending on how you look at it, probably join him over the next few years. But it's been an amazing journey since. We were really hacking on random software together. And, about 4 years ago, started to build more on-chain, doing lower level stuff with transaction inclusion, I suppose. And then over time, built random products, data analytics, trading tooling that led us to this realization that payments is quite a headache. You think it's really easy to send money, address 1, address 2, but there's a lot of plumbing and convenience that we kept using the same tool over and over for. And so we thank, I suppose, the Solana Stripe hackathon for really incepting and encouraging us to start Sphere more formally. Our timing is historically great, incorporated a week after FTX. I believe that happened tomorrow, 2 years ago.
Wow, tomorrow. As we're recording this is so November 9th is the anniversary of that.
So
wow,
we have 2 team birthdays, and just a very interesting event. But it's been an amazing journey since. Hopefully that gives folks some background. I originally discovered crypto in 2009. Luigi probably closer to 2015. Never thought we'd end up here, let alone in the payment space. But you dig into the idea maze long enough, and then you start to notice patterns that brought us to stablecoins.
It's amazing. Thank you for that overview. Let's dive in a little bit to your more early career experience. You mentioned that you ran into, when you were building, it sounds like some of the tooling and you said trading tooling and data and analytics. You were doing stuff that sounded like it was, maybe you were aware of crypto, but you were not actually working full time in the space. What were you doing? What was that job, and what were the specific pain points traditionally that you ran into there?
Great question. We came from like a Web 2 dev background. I did IoT out of college. A family has a history in construction, everything from concrete curing to solar compactors. Luigi has more of my co-founder, traditional finance background, asset managers, and eventually startups. And so we really tried to dig into the nuts and bolts of, just because, you read the docs and you start to think about how these blockchains work. And, trading is very interesting within this environment because, historically, maybe you need to be an accredited investor. Maybe you need unique access to a brokerage. Maybe you even just need to incorporate. And there's a lot of upfront costs. And so it's fascinating to us to see assets move around and kind of anyone can do it. We initially tried this on Ethereum. I had some friends, family tell us about DeFi Summer. At the time, we didn't know it was DeFi Summer, but we just saw a lot of activity during COVID. And we were bored trying to figure out what to do, where to build, and ended up leveraging some of our past experience to build, everything from dashboards, monitoring, how we were thinking about trading assets, to trying to create our own version of an algorithmic trading, I suppose, strategy, which led us down to thinking about how do validators work? How does block building work? You're submitting transactions, but what does that mean? What does it mean to go through an RPC? What does it mean when inevitably data packets hit the person who is adding the canonical block to the chain? And as we started to interface more with other people within, I suppose, the ecosystem, we weren't on Twitter, we were in Discord. This was pre-NFT time, getting into NFT, I suppose, run back in fall of 21. A lot of the topics that we had started with, people didn't really seem to know about. And it could lead to confusion, say, if a transaction were to fail, or slippage was higher than expected on a given trade. And so, we tried to create what was kind of like an indexer. We try to reveal data about the different dexes that existed, what assets were available, their liquidity. We try to make it easier for ourselves and eventually others to interact with these DeFi primitives. And, if any of them worked really well, I'd probably be talking, about a different product. Maybe we wouldn't be on a stablecoin focused pod. But it did teach us a lot about how these systems work, whether it's EVM, SVM, everything to how do you directly submit to a leader, as they call it on Solana. And how do you think about what is now called MEV? But back in the day, pre-Jito didn't really exist. It was just like a first past the post race for you trying to get your transaction included to the leader who is assigned the right to create the next block to the epic schedule. And so a lot of tinkering. And
yeah, that's the vibe I'm getting. It's like, have you always been that way? Have you always been someone, it sounds like you and Luigi specifically have kind of become used to that type of relationship to your work. You mentioned your family was also like doing entrepreneurial things growing up. Have you always been entrepreneurial even when you were a younger guy?
So me, no, I would say not at all. I always really liked games and math. For a long time, I thought I wanted to be a math professor. And then you hear enough PhDs tell you this is the worst decision that they've ever made. And you're like, oh, well, okay. Well, if they're doing it and they're saying it, maybe it's a bad idea. Definitely saw entrepreneurship in my family. Dad has done it before I even knew what it was. Started his career realistically at 57, trying to create his own construction projects. Luigi was a little bit more entrepreneurial, I think. After we first met, I got him more into the computer world, and he really drove us to create stuff that started to resemble startups. I remember thinking back in the day, isn't a startup like really risky? What does it even mean? How do you attract capital? How do you get investors? How do you scale? Couldn't think of any problems that I thought were worth solving. Interfacing with an Airbnb, I was shocked that this product existed in 2014. but you play around enough with tech where you start to see the gaps, especially at that lower level when you can peek underneath the hood. And Luigi, between us, is way more of a natural tinkerer. I'd say that I'm very selective about what I dive deep into, more skeptical historically. I think it has since reversed with me and Luigi. And so if we get into something, I really want to understand how it works and what unique unlock it creates for the world.
Well, what was it about math and gaming specifically, which I would guess a lot of founders or technical minds in the world of crypto now, probably when they were younger, found those two areas interesting? Like what was it about those specific areas that you found really interesting or might still find interesting?
Yeah, I wish I had time to play games these days. Looking back, it makes sense given the majority of like our time as a species. We've never had these just computer screens where you can like click things and have data be sent from you to anywhere else in the world. And games in the 2000s, way worse than what we have now. But it was such a large step function that it felt like you were living like a Ready Player One type of experience. Despite limited functionality. I lived in the middle of the woods. And so I had books, my parents and my brother, who is way more entrepreneurial than I am. He was the one who introduced me to Bitcoin in 2009, but didn't really have much contact with the outside world beyond that. And Luigi was the same, middle of the Caribbean, vast ocean. The islands are pretty small. And the internet, computers, and eventually games were a way for us to connect with the rest of the world. And I'd say we were both fairly competitive by nature, and games are a great way to, utilize that energy. The strategy behind them was fascinating. To this day, a lot of people within the space I recognize from like decade or 2 decades ago. Like Alex Weiss, I used to play like an online mafia game with. He's now a trader within the space, a bunch of people from the League of Legends world. So I'd say that was the initial analog for games. It felt like magic. It felt like it didn't really matter who you were, where you were in the world. You could kind of present and, I suppose, communicate with people, and it didn't really matter what your previous situation was. And that felt so magical.
It's interesting the parallels of what you're saying and what you find naturally fascinating about that is you could probably say a very, very similar thing about Sphere and what you're building and how payments feel and work as a global engagement mechanism of value. And that value is, not necessarily being put in the context of a game, but it's a very similar function from a technological standpoint, I would imagine, in your mind at least.
Yeah, it got me hooked. The magic that I felt in 21, seeing folks from Nigeria, India, Indonesia, Brazil, reminded me so much of internet in the 2000s, maybe pre-Instagram, pre-Snapchat, pre-TikTok, Facebook, like just becoming a thing. Shout outs if you use Zanga or like IRC chats, AOL, AIM, it was such a different audience though. And looking back, it makes sense why folks from like Kenya weren't using the internet in 2002. But that same feeling of magic and connecting with folks from places where you would otherwise never go to or never meet.
Yeah.
The anonymity, I suppose, of usernames. And back then it was just straight text, maybe a PFP. And now everyone had like monkey or animal pictures representing them on Twitter. And it gave you a lot of imaginative potential on who they could be. Some of the biggest chats, as is Verbiage and CT, could be an account that has a bunch of letters and a bunch of numbers and otherwise doesn't seem very interesting. But behind the hood, they might be working at a large financial institution or be an HFT trader or an amazing software engineer at a tech company. So, or, aspiring kid from a village, somewhere in Southeast Asia, and they just happen to be really smart. So very similar, like aha moment when you like get how this connects everyone, but just the total expanse of people who are available between, 21 back when I first got onto the internet. That delta was so noticeable, and I wanted to dive in deeper. Very true for payments as well, although you start to see why some of these great filters exist for adoption and, the ease of financial access, particularly in the fiat rabbit hole. But yeah, man, every app, I think this is what they say in the startup world, has, an aha moment, and just going on, Discord and seeing 10, 20,000 people waiting for llamas to mint was wow.
Yeah, you have these moments where you're like, man, am I really doing this? we're going to have to probably by the end of this conversation in the show notes have like an Arnold, like a breakdown of all of the little verbiages you use, like a little index of CT and Chad. And for people who may not be familiar, you're going to really provide a lot of value for them to get them up to speed on the nuances of like Gen Z talk on crypto Twitter.
Yes, sir.
So tell me, I want to ask you about your relationship with Luigi. Sounds like he has been an incredible partner for you, relationship to you. I find that, for the companies that go really far, there's often someone in the foxhole with you that you trust, that you can feel really that you can rely on them as a co-founder or part of the journey. What about your how did that relationship come to be, and what does that currently look like now between how you guys divide your time at Sphere?
Yeah, it's fascinating. I mentioned my father was very entrepreneurial, and hence I ended up spending a lot of time as this like weird brother. I wouldn't go as far as to say father, but like the big brother, I suppose, cultural extension of Korean culture was very present early on in my life. I met Luigi when he was a freshman and I was a sophomore in college. At the time, we didn't have this bond, but I remember the first time meeting him, being very surprised by how sharp he was, and more importantly, how low ego he was. You're at a college, it's a very high pace, intense environment, and usually folks are trying to like size each other up or compete with each other. Luigi didn't really have that same energy. And I'm actually staying while doing this pit stop in New York at the apartment of the friend that introduced us through a debate club at college. But I would say we're both fairly introverted people. And yet the first time we ever met, I remember thinking this guy is different. And going for a hug, wanting to, spend more time and getting to know him better. In the last decade, I'd say our relationship has become like that, I suppose, brother dynamic. I trust Luigi with both spiritually and objectively a lot. We know each other's like social security numbers. We know his like financial history, vice versa. We've lived together for so many years, including with him on my couch. It's crazy what he can go through. But yeah, it's hard to replace that bond. And back then it was hard to predict. Going on a spring break for the first time, just ever, and together, getting more into computers and seeing the development of, I suppose the industry and of what would eventually become stablecoins. And now I'd say that our roles are somewhat split between him handling a lot of the technical work behind the scenes and me being more of a forward advocate and higher level, maybe like planner, setting vision. I don't really know how to describe my role because it's so many different hats. Maybe coming in with more of a product strategy angle and him doing a lot of the architectural decision making and implementation. But that divide happened fairly organically. We were both coming at it from the POV of software engineers, but maybe the relative events of our lives led to that specialization fork. We are quite strangely similar though. Going back to he's from the middle of the ocean and I'm from the middle of the woods. And the dynamic of being immigrants, no matter where we were, we talked about games. I apologize for not addressing the math thing. Math is another way to connect to anyone, and not just in the world today, but the world, centuries, millennia past. It's like maybe one of the closer things that we have to an objective truth once you assume a couple of axioms. And so, yeah, I don't think it's a coincidence that we ended up becoming so close. But hopefully that answers your question.
Yeah. I have to ask a deeper question now, just on that point. You mentioned with him specifically, there's a sense of like spiritual trust or like a sense of deeper, maybe not mathematical or logical, but like there's something deeper there. For someone like you that is very, analytical, loves games, loves sort of objective truth, as you say, what does that part of the relationship look like with either him or just generally spiritually for you? I'm curious.
I'm pausing here because, philosophical type combos are very tempting for me. So I'm trying to make sure.
Didn't expect that on a stablecoin pod.
Sir, people talk about value alignment all the time and social consensus, and at the root of that maybe is some philosophy. So hopefully we don't go too off the rails. I think the most concrete representation is mission alignment. Spiritually, we both see technology as a massive double-edged sword. And if crafted the proper way, it can be such a step function, not just for us and the people that we know, but, naturally others in different places, future generations, etc. I think one of the coolest things that we've observed is living through the rapid development of the internet, the front ends, of being able to scale beyond, hardware, and now use like things in the cloud, and think about the tangible benefit it could have had earlier on in our lives, when I call it the brain carving period. And after a certain point, it becomes harder to unravel those connections. So spiritually, we're very much on the same page about trying to create positive sum games. And I think the reasoning for Luigi is slightly different, so I won't speak for him fully there. But you play enough games, especially PvP, maybe one could call what occurs in CT today an analog of that PvP game. And you realize that there's some very talented people who spend their whole lives getting better at doing a specific hand movement, maybe on a controller. And it's a beautiful thing what they're able to create on a screen. But you start to wonder if competition all the time is a good thing, or if it's locally incentivized and just very tempting evolutionarily. So not to, again, go off too far into old dead folks who wrote really interesting text. But the way that the world has played out in our relative experiences, whether it's the creation of Korea during my parents' South Korea during my parents' lifetime, or Luigi's, family's migration away from Guyana, and a lot of post-World War II events, I think there's a common core, a shared spiritual belief about creating opportunities that didn't necessarily exist for the people that we knew from the beginning. You can't really unravel the time since. So yeah, hopefully that answers your question.
Yeah, there's a ton of mission-driven ethos there around. It said just like quickly what you wish you had when, technology or functionality that you wish existed when the brain carving was going on. And for putting it into the context of what I'd imagine drives a lot of your work at Sphere now is there are many business owners and companies and people that are financially left out and financially still maybe not brain carving in the sense of growing up individually, but their business is being carved and the formative years of their companies are at risk because they still are left out and playing by old games, unupdated games that maybe because of where they live or where their business is located or access that they have to certain financial tools, like you said, they have a disadvantage. And I mean, for me, that's what's always been really exciting about payments and global payment rails like stablecoins is that they provide these really amazing tools that bring the barrier to entry way lower and the playing field way more even. That makes a ton of sense. And I do think all these things connect with what you're saying, which is really cool. Sphere, and I'd love to dive into Sphere now. Like Sphere seems like a really cool product of a lot of your upbringing, childhood, relationship with Luigi, philosophy, spirit. Like it's cool. It's cool to see that. So you gave a high level overview of Sphere, your labs at the beginning. For context, I know you know this, but just for the listeners, I've had a unique experience and relationship with Sphere the last couple of years. I think right when you guys hit the scene, I first heard about you when I was selling payments at Coinbase. So I think when you guys launched or when you were, maybe I was even talking to a customer and they were like, hey, I'm considering this alternative Sphere Pay. I was like, who the hell are these guys? Like, what are they doing? And from the very beginning, I always felt like you really had a solid and compelling and clear value to bring to the world. The brand has always been really strong. The way you present it, the offerings that the company has had continue to become more robust over time. So it's been really fun from my perspective, just being in crypto payments for a while to see the journey. Where do you feel like you're at now? Maybe give us a quick, maybe before we say now, for the last 2 years, what has been the core focus for the businesses that you've been working with? What are the typical needs that you're fulfilling for them, and how has that evolved over time when it comes to payments?
It's a great question. And I remember when we first jumped into the scene, trying and I think eventually getting into contact with Commerce. Great product. I wish if it existed on Solana in 22, we probably wouldn't be here, which is crazy.
They're biased over there. They're pretty biased about what they're doing, but room for everyone.
Sir, first principles, and we love first principles because it's from math. You build up the axioms, then you do definitions, eventually get to theorems and proofs. And when you see who are some of the smartest people in the world doing what seems like gibberish, but how slowly and methodically they take that first bit when you just start off with your assumptions and what you're working with. For us, it came back to what people want, which is now maybe a cliche coming from like YC philosophy. Me and Luigi have never really dove into the startup literature or history, frankly. Maybe Luigi a bit more so than me, but it made a ton of sense. You should build things that people want because people will pay for things that they want. And if you're, just doing those two things right, that sounds great. Maybe there's some other filters on the way, but that should presumably be the core of what a business ought to do.
So from that frame of reference, what's interesting about Sphere is you guys have both a retail and a merchant institutional side of the business. So break that down for us as high level really as you can around what do both of those profiles of your clients want at the end of the day? What are they trying to do?
Yeah, it's a great question. And the answer has changed since we started. When we first got the signals to create Sphere, a stripe for crypto, blockchains were still doing pretty well. The market was still doing pretty well. There were still a ton of people in the afterglow of the 21 run who were interacting and maybe wanted to pay for things on chain, including us. And hence, that was the first phase of the company. We built what we wanted, a really nice UI, super easy to integrate. It does the task of making payments a button click, reconciliation a download of a PDF, a CSV. After we incorporated and got our funding for a seed round, everything went to the Pico bottom. And those same folks like us who wanted crypto payments weren't around anymore. There weren't that many things to buy, and people didn't really want to use the chain as much.
What were those original? I have some sort of guesses just from my own experience selling this stuff at that time, but from your vantage point, what were the core payment use cases that seemed most popular that you mentioned went away, and why do you think that happened?
Yeah, a lot of
this was like what, 21 you said?
Yeah, 21, 22. A lot of experimental stuff. DAOs trying to sell merchandise, software providers trying to sell easier tooling to interact with chains. Always stuff in the trading world. Maybe there's a bot that lets you trade better. Maybe there's data that you can download to trade better that people sell. Maybe there are analytics tools that give you edge.
And these are, from what you're saying, what I saw was like very, very common use cases for crypto when you have a crypto forward software business or analytics tool or something that is you need to charge for it. They're them sort of like Sphere. Like if you're selling a product in crypto to another crypto business that has very familiar with wallets, assets on chain, I found that those types of payments and the volumes around those payments actually got pretty big when you had both parties fairly crypto native. One party was selling something that was a crypto native solution to a crypto native business who needed it. That was a huge volume based business, I think, at that time, from my perspective. I'm curious if you saw the same thing.
Yeah, it's like the liquidation cascades that people talk about. No circuit breakers. So if everyone's making money just by holding a given currency, they are much more likely to be willing to spend it and spend it on tools or ancillary products that help them, make even more. If you're part of an NFT DAO, the NFT is really appreciated. Maybe it is worth buying, a shirt, a ticket to a private event, because there's a positive feedback loop that's occurring. Vice versa, if everything's down bad, no one's really making money off of either trading or, being a part of a DAO, or, reading what's happening on the chain. Then it's the reverse. It's a negative feedback loop where no one has really money to spend and there's not as much to buy. And we saw that over the subsequent 6 months or so, where a lot of companies were worried about survival and didn't really want to have a gateway. A lot of them ended up shutting down. So super interesting, though, to hear about what you saw at Commerce.
Yeah. The volumes at that time, though, were mostly, from my perspective, fluctuating assets like Bitcoin, Ethereum, like those types of payment methods were most commonly used on our side, driving the majority of the volumes. It wasn't really, and I think that sort of the point you just made is more, that takes a bigger, deeper effect when the assets that you're using to pay have a naturally speculative nature, right? And it wasn't until my later days at Coinbase, like 22, after that sort of trough moment where the industry was like, what if we just used like a stable asset and we didn't have to deal with a lot of the, maybe downsides of or limitations of using a currency that naturally goes up and down. I'd actually be curious from your standpoint, as Sphere has evolved, there are to take payments in a, whether with stable coins or with a fluctuating crypto like a Bitcoin or something, or Solana, that comes with a lot of unique issues or just challenges compared to a stable coin. How, things like just the tax treatment of that, the sort of refunds are a whole conversation as well. There's some really key benefits of no chargeback risk, incredibly fast settlement times. It's way more affordable. Like the selling points are there, but at least in my experience, there were a ton of really interesting, nuanced pain points. And you've mentioned just a couple of them, but what else did you see were interesting challenges that you faced maybe before, I'm guessing, stable coins became really, really prominent?
Yeah, some weird technical challenges. At the time, account abstraction didn't exist. And even today, it's quite complex. Introduction of what is essentially another mempool, handling all the edge cases around it. On Solana, even things like pulling from an oracle like Pyth to get proper pricing on given volatile currency was tough.
Because what happens, right, is I click something online, I want to buy a t-shirt. In that moment, the tech that you're mentioning, in that moment, you guys have to fetch in that second whatever the price of that asset is. And if you're accepting maybe dozens or a lot of these things, you have to, just for that transaction, you have to ask the market, how much are these things worth? And then create a checkout experience where that creates this volatility window right after that point. So you guys, did you essentially build all of that tech for, was it just Solana at that point, or how did you architect that?
Yeah, it was Solana and then Ethereum maybe a couple of months later. And yeah, there's some very weird filters. If you include an oracle read within a transaction or a set of transactions, and you're processing a lot of requests at the same time, the compute unit limit or gas limit equivalently on ETH means that things might get dropped or the user might end up paying more than they expected.
Yep. Overpayments, underpayments. Yep.
Yeah. And that's something that we saw zooming out to your question. I think earlier than most, the blocks on Solana were getting filled from a compute unit perspective, even during the bear market, without any meme coin mania, which was very strange. I think the other component that's maybe less technical and more payments related was sustainability. The whole point of this tech is to make it so that the margins are not very high, so the user gets to save money. But if the margins are essentially nothing, what allows you to be sustainable as a business? If you charge 1%, a competitor can come in and charge 0.8. And like rationally, it kind of makes sense to use their product if they're roughly equivalent otherwise. Because the blockchain takes care of so much of the back end and traditional friction interfacing with the bank or liquidity at a bank, it becomes even easier to compete on the front end or ancillary software. You start to see a race to zero. That's kind of similar to maybe to what the recent interest in stablecoins will produce. I'd say those were the two main things. Maybe like a philosophical dislike of fiat from a lot of the crypto community as well, which was strange to us because we didn't, like philosophically, we really like crypto, but we also live in the US and don't want to go to jail. Like we have, bank accounts, we pay taxes, we would go to a hospital if we got sick. And so there's an ease of stating things pseudonymously on like social media about what you want, what you don't want. And a lot of people were surprisingly less willing to compromise, I think, on say like no KYC on-ramp or, being able to touch fiat without respecting the rules of what a bank or a fintech would want to see, who's actually taking the liability in completing a transaction.
Yeah, there's a lot there. So you have like just the technical complexity of building a system that is supportive of these assets that are going up and down, payment exceptions. The technical burden of that is not only just hard to stand up, but also, I'm imagining, pretty expensive to attribute payments in that sense across a network of merchants and payers, and there's a lot there. But then you have to, play by the rules of this existing compliance and legal infrastructure that is unique to each jurisdiction that you work with, and each merchant is in a different one. And how have you guys, as a rapidly growing, innovative team, towed that line? Like, how do you think about staying in bounds with having to continue to play with the banks and play with a lot of these companies still today that I'm imagining use Sphere? They have probably the majority of their business still in fiat world, and they're going, if they got to go to the hospital, like the hospital is probably not accepting Solana yet. How do you feel about that balance, and what are some unique challenges that you've felt maybe about stuff like KYC or things like that in the journey?
Great question. First principles, same approach. Why do you need KYC? Why do you need compliance? And in Pico Bear, we had a lot more time. So we could actually just read BSA in its entirety. We could dig into country-specific regulation and then always supplement our knowledge by talking to experts, making sure that we're not missing some delta in explicit versus functional rule set. And it starts to make a lot of sense why like KYC is a thing. Terrorists are bad. You don't want them to launder money because then they're going to do more terrorism. So you want to make sure that the person using your bank account or interfacing with your bank is not a terrorist. And, you want to prevent fintechs who are moving very quickly from like commingling user funds or just, intaking wires and then just spending it on, real estate or something. So we really thought about the why these rules are in place. And that's when it became more obvious getting into the nitty gritty where things could be improved from a tech POV versus tech isn't the main blocker. And to stay compliant, there is a minimal base where, transitions from like civil to criminal liability, or there's like strict liability, say for OFAC. And that's when we discovered the world of risk and got very lucky with some of the folks that we had met along the way, like Anthony, who was our risk officer and, within bank compliance and at banks for like 3 decades, and was able to provide more of that traditional perspective. So with any nascent technology, that line gets blurry and you see very high risk tolerance and very low risk tolerance. But I think the biggest dearth was technologists or, very philosophically keen, maybe like that's their highest priority. I don't know how to describe that. Folks not also digging into the why, because it's very boring digging into the why some of these rules exist. And it's easy to want stuff if you don't know the details of why these frictions exist. It's one thing to want a no KYC card on-ramp. It's another to be on the other side of it. And, if people are committing fraud and can use a computer to commit fraud a lot, for you as the service provider to go bankrupt overnight, or you as the bank to take way too much liability or risk, card network, any one of these multiple entities involved, there's certainly a lot of efficiency that can be driven through this type of technology. But we just had the time and frankly, no other choice but to dig into some of these rabbit holes to make sure that we were doing things properly.
Yeah, it's hard to be a payments startup on chain and not run into the risk of what the nature of the business is, because you're right. I mean, there's a ton of responsibility that comes with that. What have you, or maybe Anthony, like you mentioned, bringing him on was really helpful. How have you guys sought to solve that? What are some tools that you use or companies that you work with? Because for people who may not be aware, what you guys do really well that I see is for companies that use Sphere and they want to accept payments or do business with stuff like stablecoins to take payments in or send payments out, you guys play really well with banks and or fiat, where you can do things like auto conversions to things like dollars for certain businesses in certain areas. And that is a really amazing selling point where you can say, hey, I actually don't need to touch crypto, but I can have it auto converted and swapped and land in my bank account. That's a big selling point. So how have you managed to make that work? What sort of tools or things have you done to solve for that?
Yeah. Chain analysis paid them a lot of money this year, very early on in our journey. Strict liability is very scary. And so, properly sanction screening, doing the blockchain equivalent of transaction monitoring. Anthony came in from a bank POV. So the policies and procedures that we were initially using were very conservative, coming from a chartered, bank license holder, I suppose, or charter holder. And so the EDD, CDD requirements are just way more intense. And it's a great base, a foundation, I suppose, to build on top of. Recently we've migrated during the second phase of the company towards this more implicit use case that you described, where someone, who might not know a ton about crypto, but just wants the properties of blockchain, speed, lowered fees, a robustness in the completion of settlement. Stablecoins are a super useful middleware. You could mentally model them as, hey, maybe you have money in a bank account and you're creating an abstraction on top of that money. Traditionally, perhaps it'd be like a pouch, or derivative's not the right word, but like a representation of the funds sitting at rest at a bank. Stablecoins are just another extension of that in our view. And trying to map this technology to what has previously existed gave us a lot of evidence of how it might be thought about or treated for more traditional folks. So, the notion of aggregation is becoming quite popular. The idea like, hey, to get global coverage and solve last mile payouts, you should use local providers. These local providers, because we're coming from a blockchain context, are willing to do the stablecoin conversion and ultimately transmission of fiat. But what's interesting is if you zoom out and think about fintech broadly, that's what everyone does. Stripe is going to leverage local partners in countries where it might not make sense for them to get licensed, have an entity set up, etc. And vice versa. Flutterwave's going to do the same thing. Adyen's going to do the same thing. And there is a regional concentration for their primary base. It makes a ton of sense, and we're probably going to see more of this over the next year. I think I tweeted a few days ago that this time next year, I'd be shocked if there aren't hundreds of stablecoin APIs, and doing a very similar type of behavior to what you see in traditional payments. I think we were just a little bit earlier because we tried to do crypto payments first at the worst possible time.
Well, it's an interesting, it's a unique challenge because the middleware, as you call it, of stablecoins is something that is inherently global. It's something that if I'm a business or a retail user of this technology, I can send and receive value pretty instantly all across the world. However, you can sell that and that's really shiny and exciting, but then you have to go back and say, okay, well, how do I off-ramp this? Or how do I get this into my bank account? And that becomes a really, really nuanced problem depending on where that business or user is. How have you guys, just on that point specifically, sought to solve that? Or what is that like the last mile for you guys right now, getting people's stable coins or value on chain into the banking system? What's that been like lately for you?
Yeah, with any type of incoming funds, whether it originates in stables or originates from an invoice from some country, the receiving depository institution will want some information, so that way they can run their own checks, make sure that they themselves are not inadvertently taking on, hey, we might be helping a terrorist get money risk or facilitating money laundering. Don't want to beat a dead horse here, but took the same framework of first principles. You break down, what is this technology really? It's a distributed database. It's distributed because it has a consensus, a protocol or mechanism. It has this feature of being append only. It uses cryptography to guarantee the fidelity of that append only. Very similarly to how maybe S at the end of HTTPS or TLS or 509 certificates work. I think one of the great temptations of any new technology is to believe that this is a 10,000x in every single dimension and has never happened before. And, they aren't incorrect, at least aren't in Arnold's opinion. Like, this very specific mixing of ingredients has produced a pie that no one's ever seen, but there are very similar types of pies usually. It's insane how often history rhymes. And whether it's, an emerging market just trying to access the fiat system for the first time, payments in LatAm, Africa, MENA broadly have historically been very hard, ran into very similar problems to accepting stable originated funds and ultimately remitting that out. Or thinking about, the last mile within a payout. We just looked at what happened before, tried really hard to map the first principles breakdown of a blockchain on top of, the decades of fintech, and before that, what we now call TradFi. So, the concrete examples would be identifying source of funds. What is the nature of business activity? Can you find market makers who are willing to trade against you? Are you able to do the last remittance transfer, or I suppose just last transfer between bank A and bank B? Yeah, it's just like Stripe. You find a local provider, and it's in that journey of trying to find local providers where you run into another set of problems of counterparty discovery and risk.
Yeah. I have a couple more questions for you, but I know I'm looking at the clock. Do you have a hard stop right now? I can go over if you can.
Yeah, I can go over.
Okay. I feel like we're just getting to the good stuff. So you mentioned with specifically, in some ways said differently earlier, like a race to the bottom commercially with a lot of these decision frameworks that sometimes these businesses in traditional payments or fintech, it's like, oh, I have two options. I can save a few basis points with option A. I'll go that way. Like the differentiation is often really hard. And I think right now in the world of stablecoins, and as you mentioned, in a year from now, there are going to be so many more startups doing this stuff. How do you think about, because just being first is no longer the advantage, which I do think you guys have been one of the pole position early startups who are innovating, and you may have experienced some advantages being early. How do you think about just continuing to build a competitive differentiation for the business? What do you think 1, 5, 10 years from now, how do you stay for Sphere competitive in a market that in some ways is always racing to the bottom? That's often not. Price isn't always the best way to stay competitive, in my view.
Yeah, 100%. And I think this will be the question that all stablecoins, but broadly, any type of durable can be reused, a commoditized good, and in our case, payments infra, first stablecoin infra, and then eventually payments infra will run into is how do you differentiate now that you have required regulatory disclosures? Anyone in the world can scale up software globally. Now blockchain allows you to send money, in a sense, anywhere globally. There are local license providers who are willing to provide you their services of conversion almost globally. And so now that we're seeing increasing commoditization, how do you either differentiate or have a good service that's so good that people are willing to pay extra margin on top, which is now your revenue? Similar answer to what I said before. We're early in this cycle, but we're not early in the grand scheme of things. Last cycle, you had Wire, you had MoonPay, you had Zero Hash. There was a ton of funding into wrappers or similar types of entities in 21, 22 that have had licenses turn on and are now becoming more available as providers. Mercurio, Banxa are other examples. Zero Hash has been around for quite a long time. MoonPay a little bit more recently, but has also been around for a while. So this idea of doing stablecoin APIs transmission is not new. I think, though, that the lack of regulatory clarity combined with enforcement actions that were quite harsh thereafter created a gap where it was tough to get licenses unless you were the first. And that led to people being able to drive margin because the commoditization isn't quite there.
And for people right now who aren't as familiar with what you just mentioned, how many people, like, for example, maybe the Bit license in New York would be a good example. Like, from your knowledge, how many companies on planet Earth actually have, in New York, for example, the license to do what you're talking about?
I think for Bit license in New York, it's like a dozen.
A dozen companies. Yeah. Companies on planet Earth have been legally approved to transmit value on chain on behalf of people. That is insane to me. That to your point has created a huge moat. So just wanted to give that detail to the listeners.
Yeah, and people have gotten very creative since to try and transmit to New York. And to their credit, there is a lot of subtlety in the construction, legally, operationally, of the funds flow and how you might make this work. I think going back to your framing of 1 year, 5 year, 10 year, one of the coolest parts for us coming less from the traditional payments world, but having the luck of recruiting those types of folks along the way. Yet the DNA of the company was very much more blockchain native, really getting into the nuts and bolts of how this distributed database works. Amidst a lot of noise, there are some very cool developments in mechanism design and frankly, the economics of other types of commoditized durable goods where global reconciliation creates new opportunities for value accrual. And, that's likely where we will rest our head on because it again exists in the traditional finance world. just not in the same capacity because of brokerages and bank accounts and the inbuilt friction. I think a lot of people are thinking currently about issuance and the yields from issuance. Was just chatting about this a few hours ago. I don't know if this is a hot take, but this is just my opinion, is you're probably going to see tons of stable coins be created. Most people punting the thinking about the rates and the yield behind them, just because you see Tether, make 4-5 billion in a single quarter, more than Goldman with like 50 employees. And you're like, wow, why can't I do that? And that is a great temptation. But when rates go to zero, maybe it won't be for a really long time or get closer to zero. Where does the yield come from? I imagine there will be a lot of apps that try to create stable coins, utilize them as like point systems in a sense, offer perks, because the current construction of issuing a stable coin is people wire you money. You are maybe selling them a digital token representing a one-to-one right to claim that money. But fundamentally, you're the one in control. You're the one who is parking that at a custodian or at a brokerage, exchanging it for T-bills or cash equivalents. And there's a lot of leverage that you get from that. So,
and you seem from what you're saying, you seem bullish on the idea that more and more of these stable coins in that framework will be created with firms like Bridge or Braille or any of these issuance startups. So you think that is going to become more popular, but you are less bullish on the idea of that in and of itself being a sort of like a competitive long-term business model, as rates, in your opinion, are going to go lower over time.
Yeah, unless they're secretly really good at carry trades or other like low risk during times of low interest rates, ways of generating yield, in which case they probably just should have started an HFT to begin with, or a trading firm to begin with. Yeah, next 5-10 years, there will for sure be tons of stable coins. Next 30 years, I don't know if there will be tons of stable coins. I've heard both ends of this. Either there are a couple of winners or there continues to be a ton. But zooming out, commoditization and durability, right? If issuance becomes commoditized, maybe the roads lead back to a familiar setting of product differentiation and where users want to be to justify them holding your version of a stablecoin. The perks that you offer are like the main reason that they want to hold your stablecoin. I think though that this is not new. This is not a form of new value accrual that this data structure enables. So it's not where we want to rest our hats on, just because the trend towards commoditization just leads back towards, do you have a really compelling product ancillary to the stablecoin itself? It's maybe an impact multiplier, but not a net new 0 to 1. I think though that there will be a way for payments companies to monetize in a new way. It just the timing isn't right for how transactions are conducted today.
Yeah, a company that is just very top of mind that is doing what you just described is Dakota. Talked with Ryan yesterday, recorded our episode, and he'll be a part of this first batch of season episodes coming out. But that's essentially what they do. So they have this really compelling treasury management banking solution where institutions, venture-backed startups, foundations can have a on-chain banking experience that's superior and more global, all these things. And that in and of itself, that value add in and of itself is enough. And then this sort of ancillary, like specific stablecoin to Dakota that they've created is something that they pipe in within the ecosystem as a way to just really monetize that business on their end. At least, I don't know if he is thinking about that as a long-term commercial model, but right now he's like, hey, we can provide a superior service to something that you would get with Chase Bank for a business who's living on chain, doing commerce globally. They're going to flock to us because that's way better. And then if we can just nestle in this native yield-bearing stablecoin as the network grows, for him, in his opinion, and what we discussed was that's a pretty interesting way to make money. I'm curious what you, in the short term, how you would think about that with Sphere. Like you guys have, a lot of value going in and out of your rails right now. It sounds like for merchants that want to use the platform, they have to bring their own wallet or connect a wallet that is, in a sense, custodied and managed by them in a sense. But right now, I believe like USDC, and I saw that you guys are just announced some stuff with Ondo. Like, how are you guys thinking about that aspect of potentially having something that is more a stablecoin settlement network that you might own or something in that sense? Is that attractive to you? How are you thinking about that?
Such a good question. I'll do a couple of hot takes. I'm happy to dive into any of them.
Because right now, just to frame this too, like right now when you're moving money in and out, that's Ondo, Circle, Tether. Like these are the folks that are getting the financial benefit of that pie growing. And yeah, how do you think about potentially being a part of that?
So good product is definitely the invariant. It'll always be important. Whether wherever you fall in the degree of commoditization, it's hard to imagine wallets being the right abstraction. Think like 500 years in the future. It's hard for me to imagine that like I'll be clicking on a button in my browser and like typing in a password and like, clicking on things. In the short term though, really great abstraction. Some of the best products, are wallets today. I suppose my like TLDR take is like going for higher ownership and the value capture is short-term necessary, medium to long-term won't be the way that the world hopefully becomes. And, I say hopefully because you just need one. It's like you just need one, but the temptation is to maximize ownership. But the problem with maximizing ownership on say like stablecoin and T-bill yield is that you're continuing the cycle of small company does a product really well, grows, needs to drive margin, eventually either becomes commoditized or becomes too large where some startup can come, challenge them, undercut them, offer some niche service better, and eventually get acquired, maybe overtake them. The cycle never ends. And it feels like compared to the last maybe couple of decades of fintech, stablecoins and blockchain are going to accelerate this cycle. It's going to be like on steroids. Previously, I had no idea what you were writing in Postgres or what you might be hosting on GCP. I see what you're forced to disclose to me on your website. On a chain, though, I can get a lot more granular information about what you're doing. And if it's anything that requires some trust, it should probably be open source or otherwise adoption will likely be stymied. So the way that we're trying to think about it is how do you create win-win games? I don't think it'll likely happen at the distribution of T-bill ownership, frankly, although I think the yield redistribution will certainly be a thing and will become the default state. Kraken, Robinhood, Paxos, releasing like the global dollar network and all that yield being passed back, that is inevitable in my opinion.
So you see that as essentially just another commoditization. Eventually that will happen. It right now feels really competitive and unique, but how long do you think it's going to take for that sort of model, which I think is really fascinating, at least in this current moment? There aren't many, the issuance of that, the sort of the ecosystem that creates. That's why companies like Robinhood are like jumping at the bit to do it, because they're like, yeah, why wouldn't we own that sort of asset and appreciation of that, network growth of that? Jeremy Allaire has been making a killing doing that himself. We could, what if we took a little bite out of that pie? It seems interesting, but from what you're saying, you seem to believe that that's going to become just another race to the bottom commodity in a sense.
Yeah, sans regulatory capture or 10,000x product experience, just rationally considering 0% yield versus say 95% yield share. I don't get why people wouldn't just use the 95% yield share. And an issuer to go from 95 to 96 is like changing one variable. An engineer could push that out in 15 seconds. Yeah, it's hard to imagine why it wouldn't happen. I don't know on what time frame. That's a different question. 5 years, 10 years, 1 year.
It's interesting because currently we live in the primary frame of mind in the world of payments is, at least traditionally, you have things like interchange and the percentage fees that a merchant would typically be assuming is just to do business, like a 2 or 3% fee to take payments using credit card networks and traditional stuff. You then have this interesting moment where Coinbase Commerce, BitPay, Sphere, like the on-chain alternative is like, hey, we can, cut that down a ton. We'll charge you 1%. It'll be a better product, faster, more global. That's probably going to continue to go down. And like this new, it sort of feels like what we're talking about is like the next potential chapter of monetization of payment networks where the asset itself becomes, but your mind is so far ahead that you're almost saying like, we're going to run into the same race to the bottom with this new world thinking here as well. So I guess I go back to that question again of like, maybe in the next couple of years, you might consider doing something like that, maybe, but you're trying to build a business that exists for a lifetime. What do you think is going to be that main thing that keeps merchants and businesses and users on the platform happily using you, even in a more expensive way? to alternatives that might smell similar, what do you think is going to keep you sticky?
It's a great question. I think compliance and security are two things that we like to focus on. The risk spectrum is an interesting one. There's a lot of great temptations along the way. And some of the recent news, by the time this podcast comes out, will make it more evident how we're investing in this area. I think, though, that it's so interesting this time that we're living in, man. Suppose, to take a crazy idea, AI at some point in the next 50 years creates immeasurable wealth for every human. Do you really need companies anymore? Do you really need to make margin? Like, first principles is like you're paying in some sense for the service, the quality of the service, what the product actually does. But for a product like payments infrastructure specifically, historically, it was the back end. It was like, how do you do the reconciliation properly? How do you like settle it across the globe? I don't think that in the limit, there will be a payments infrastructure specifically company. I do think there will be payments companies, but I just don't think that the need. Olaf from Polychain once said something really interesting to me, which is like, in 2012, I saw these machines instruct humans. I'm like, that's crazy that you realized that in 2012. You can sort of see it play out with like Truth Terminal or...
What is that for people who aren't familiar?
It's like an AI bot that some AI researcher created decided to create its own meme coin and then just like posts periodically on Twitter, became the world's first non-human millionaire. And,
Andreessen's involved with this, or was he the one who created this, Mark?
He funded it.
He funded it. Brian Armstrong's tweeting at this thing. Yeah, it's an interesting experiment.
Yeah, and is it consciousness? Maybe not, but it is super interesting that a machine is producing so much reactive human behavior. It's hard for me to imagine that payments infrastructure, specifically, that last word is key.
Infrastructure?
Yeah, the infrastructure part of it, because payments companies are really, I don't know if that goes away without bigger problems, humanity being replaced. But the infrastructure part of it, if you break it down into units of production, like the time value of money, labor, like what is required to do reconciliation, what is required to do settlement clearing, what is required to transmit messages between participating institutions, I don't see why that would be a company. You can call it.
But right now it is what you're saying. Those types of difficulties we currently experience, but maybe longer term, that's going to become pretty commoditized.
Yeah. And, the $1 trillion or whatever question is just like, how quickly will it accelerate towards that trend? If the last few years have been educational, the race from we take all your stablecoin yield to we're going to give back 95% of it, it was like a year or two. So I'm very curious to see if time's getting faster with like AI, how quickly we get to that.
So on the compliance and security front, I was talking to Nas, the founder CEO of Bastion, about this exact topic, and you would love to talk to him about this because I think your perspectives are very similar of like the true moats and the true long-term as AI becomes more and more sophisticated and replacing of the picks and shovels of what we're talking about, that just becomes a free service to human beings. The regulatory and compliance and security and licensing and the moat that will create becomes really one of the most valuable things, the trust that you can have in those types of systems. What do you've mentioned things like Chainalysis, things like that you use to increase the trust of the system. What other things are you doing to wave that flag for Sphere to ensure that you're continuing to be sticky and secure and doing that well?
Yeah, inspired a lot from the early days when Anthony joined. Do things you don't have to. Volunteer for requirements that you don't have to give as much information as you can to the people who are responsible for protecting us from terrorists, from money laundering, from crime. Be a willing participant in educational initiatives. It makes sense why folks aren't going to be on CT all day to like figure out the latest way a fraud vector could happen. But trying to, go above and beyond our obligation at the what is written down on paper level. Yeah, I probably would enjoy talking to Nas about it because, the smooth brain abstraction is like someone has to be there to turn off the machine. That is an analogy for compliance.
Yeah. Cool. I've really enjoyed this chat. This has been really fun. Maybe we can just end with some random top of the brain rapid fire questions, and then we can wrap up here. First one is, what is something that you have never talked about with Sphere? I know you're on podcasts a lot. You you do a pretty good job of like spreading the news about the business. What's something that you've never shared or talked about that you would like to share, or maybe something the world doesn't know that you've done, or businesses you're working with, anything that might be new, fresh info?
Because this is lightning round, I need to think about what I've said so that I can figure out what I haven't said.
It's a tough lightning round question. This isn't like, what's your favorite color?
Can we come back to this one? I'll think about it.
Yeah. I'll let you buffer that. What's one word reaction to the news this week of the election? One word reaction.
Interesting.
How are you? You have been a really innovative founder within the Solana ecosystem. What's one sentence to describe why you chose to build on Solana versus other ecosystems, or prefer, go really deep there?
It works. That could just be the sentence.
That's a good one. Who's someone in the space on crypto Twitter or in the world of just payments that you really look up to or admire what they're building? You might look at them as a leading voice, or someone you're really appreciative of doing something outside of Sphere.
That's such a tough one. Historically, I mean, this answer is probably more popular now because they just got acquired for a lot of money. I learned a lot from Zach and Sean. Luca from M0 is, I think, very, very smart about this stuff. Christian Caolini, he did Libra DM into now Lightspark.
Did you see his, I think, Wall Street Journal article about why everyone is wrong about stablecoins? Did you see that?
Yeah.
What'd you think about that?
Took the words out of my mouth. There was like one bit I disagreed with, but otherwise I was like, yep, this is exactly what I think.
We should get him on to just like spread that message on the show. I think that would be interesting to have as a part of the conversation. And then what's one thing that you are grateful for going into like the Thanksgiving season, holidays? Like, what's just personally or professionally, what's something you're feeling really grateful for right now?
Grateful that I can do this. I don't really get stressed out or like tilt or have doomer emotional volatility, because a couple of years ago, what I was doing was way worse than what I'm doing today, even though it can be like objectively stressful. I'm just grateful that I can work on something that I find like, fun with people who I think are smart, hopefully solving stuff for others.
All right. And we're going to loop back to the first question. Have you come up with something that you look very angelic, by the way, like the sun is coming on your face? Like,
yeah,
this is the moment.
Something I haven't talked about, definitely haven't talked about this because the election hadn't happened yet. I think this could be very good for the crypto as opposed to blockchain space over the next few years.
Tell me when you say that crypto versus blockchain, how do you differentiate those two things?
I think crypto is like this mix of culture, people, technology, products. It's a lot of that. It's a little bit more cypherpunk. It's a little bit more CT, if you know what I mean. All sorts of characters. There are a lot of coins. I would differentiate with blockchain as blockchain is just a data structure. So I think this could be quite good for crypto. I worry that this could lead to a blow-off type event. It almost seems inevitable because the industry has no circuit breakers. Consensus mechanisms don't have circuit breakers. The whole point is almost that there aren't. So yes, don't want to be a negative Nancy or Debbie Downer. I'm very excited and thrilled, frankly, that, there might be more reasons for people who work in the industry to come to the US. Hopefully we get some regulatory clarity. Hopefully this leads us to being able to create better products for more people. But the paranoia in me wonders, like, what does blow off look like? I've never seen a super cycle in almost anything.
You think we might be nearing one? I haven't heard that word in a minute. Super cycle. It feels so like dust the the dust off that word. That feels good to hear again.
Yeah, I hadn't heard it for a long time either. And I think it was like Murat or something. Someone?
Yeah, that was like 2018, 19 super. So you think we might be nearing something like that?
I don't think there will be a super cycle. I think no circuit breakers means there will always be a roller coaster up and down. And I don't think we're near the top of the roller coaster. Usually it will be like, Drew, you sending me a text saying, hey, I just bought an island somewhere. Everyone knows my positions, sending like photos of like Lambos, or like random person asking like, what coins do I buy? Like the shoe shiner moment, right? Back in 1928 or whatever. So don't think we're quite there yet. think there's been a lot of tension that's been released for this space. I just personally am curious, like when we might see a reversal in direction, and I hope that I think it's like the cycle of euphoria, no, the euphoria coaster, where like the circles get bigger and bigger, and so the rise up gets bigger, the crash down becomes bigger, and that usually seems to be what happens when there are no circuit breakers. So I hope that the world still is in a good spot in 10 years.
Yeah. 80% drawdowns hurt way more when the pie is bigger. And I do tend to believe myself that there is an inherent volatility in that sense too, at least if you look back historically on price actions and how the space kind of expands and contracts. Like that does seem like a pretty inherent, maybe not as gradual over time or not as significant over time, but I would be I would caution anyone who's just now entering the space, listening to this, thinking that there's nowhere down, like we're not going to be going down ever again. Like that's just not, there's no reality where that doesn't happen, in my opinion. Need to probably come out with like some financial advice disclaimer now for this show. I'll have to add that to the front of the show. But yeah, man, this has been really fun. I always enjoy talking with you, and your perspective and outlook and the way that you think is so forward, and you're always seeing around corners that I think a lot of us are perhaps not even thinking about yet. So it's always it's fun to learn from you. And any final thoughts before we part ways?
If you ever feel like you're going to retire off of something, not financial advice, but definitely send me a DM. Usually indicates this some sort of signal. But no, I think it's just amazing to see what will happen with dollar account issuance, and really appreciate you hosting. Always a pleasure. And hopefully some of my ravings were coherent and maybe thought provocative. Would love to talk if any listeners found any subtopics interesting and want to dig into it more. And otherwise, appreciate you for making this happen, man. I think we do need more stablecoin focused discussion in the space.
I agree. Thanks, Arnold. Good to chat with you, man.